Welcome everyone. My name is Martin Feldkircher. I'm the professor of international economics here at the Vienna School of International Studies. My background is in monetary policy and international economics. So it's a great pleasure for me to moderate this panel on the role of digital money and a new international monetary system. According to the BIS, 9 out of 10 central banks worldwide are currently exploring CBDCs, central bank digital currencies. Some of them still experimenting using different design options. Some of them already moving to the pilot phase. And some of them already having launched full-scale retail CBDCs. So I think as the conference theme is on de-risking, and we have had other panels on globalization, and basically the takeaway was that we have seen the end of a world order, which was characterized by globalization, and we are now transitioning to a new phase where we don't know actually what that new order is going to be. And I think that time makes it really difficult for central banks to come up with a new technology, to come up with a new form of money, because money is a very important public good. So my reading on CBDCs is also a very broad one. So we have entities, agencies, mostly institutions, that are very optimistic on CBDCs, that are very bullish on CBDCs. I just read from the ECB's webpage why we should use CBDCs is because simply it is a better form of money that will make all of our lives easier. Then we have the academics that are more skeptic. So there are concerns about privacy issues. Then we also have a skeptical view from the commercial banks that fear financial disintermediation. And then we have also some very gloomy think tanks that fear a complete takeover of money by governments. So some of the fears might be unfounded, some of the fears might be grounded in misperceptions and misconceptions. And I hope that this panel today also will give us the opportunity to see what fears are grounded and what fears are basically due to the fact that digital money is not easy for the general public to understand because it involves a high degree of technological knowledge. So today we have with us 4 distinguished panelists, and I would like to kick off our discussion by asking every one of you a question, and then maybe a follow-up question, and then I will open the floor to have some questions from the audience. So I would like to start with John. So let me introduce John Velissarios, who has over 2 decades of experience in consulting across multiple business and industry sectors. He has founded the Otranto company, a digital financial markets and CBDC consulting firm. And he has recently advised the National Bank of Kazakhstan and the Digital Euro Association. So John, I would like you to set the stage for this roundtable. I would like you to give us an overview about the current state of global implementation of CBDCs, which countries are on the front, which countries are lagging behind. And maybe you could also, because you have these insights through your work with central banks, maybe you could also give us a little bit about the motivations, the reasons why some countries push for CBDCs and why some other countries are more reluctant. And if you still have then something to say about maybe the most difficult question here on the panel, why do you think that we need CBDCs at all?
Okay,
thank you.
Just checking, yeah. Thank you very much for the opportunity to be here. Thank you, Mark and the team, for inviting me to this event, and great to be on the panel with such distinguished panelists. I want to start with maybe a little bit of a personal history behind this, because my journey in this whole space, besides sort of being in consulting and working in financial services for quite some time, I started on the journey of working with central banks roughly around 10 years ago. And it started with a project that I sort of got involved in and managed to sort of drive the delivery of, based on the fact that they were looking at how was crypto going to affect them with regards to this new emerging format of money, token assets, or basically crypto, Bitcoin specifically, and how that would impact them going forward. That quickly changed to a project where they realized that that wasn't as much of a threat as they thought it was going to be at the beginning of that project. And it became more of one where they can adopt this innovation and do something innovative with it. And at the end of that project, we ended up sort of implementing a prototype to showcase that they could issue their own, and they could implement their own and deliver something innovative into the market. That was a long time ago. Many things have happened. We didn't call it CBDC back then, and many things had happened since then. And I was fortunate enough to sort of drive an area of the business in the consulting company that I worked for, where we looked at a number of projects since then. So from that project specifically through to projects in Canada and Singapore, even Sweden and the e-krona project as well, things that my colleague on the left of me that I used to work with, we were heavily involved in driving the project and that innovation, all the way through to sort of the latest message that you mentioned about sort of the National Bank of Kazakhstan and the Digital Tenge project that launched a limited production sort of system into the marketplace and so on. So there's been a lot of innovation, there's been a lot of developments. I started sort of, I was going to show slides, but I decided not to right at the end, about sort of how the world has changed, the world map of all the different projects that are out there that have started off very much on the exploratory side and that have now sort of tipped into implementation and production implementation, rolling it out to users and to the marketplace. I take a look at countries like China and the fact that they've rolled out, even in a pilot mode, 240 million users using it for doing transactions and retail transactions and so on. Again, through to sort of countries like Kazakhstan that are even, up to a couple of weeks ago, launched this and put it into a limited scale production. So I look at sort of the innovation behind this. There are a number of reasons why, and I'll touch upon the motivations in a second. But I think that there's been a tremendous amount of exploration, piloting, conceptualizing, trying to understand how relevant it is in terms of any central bank and any particular market or region, how relevant it is for them, and how to adopt it and how to innovate and implement it and roll it out and then actually put it into the marketplace. There are a number of dimensions around CBDC, and maybe just to touch upon this briefly as well. We talk generally around sort of retail cases or end users, consumers, and so on, using it for day-to-day usage, all the way through to wholesale security settlement, all the way through to other aspects like cross-border settlement. And we've been somewhat guilty of using language like retail and wholesale and being very explicit about that. But in reality, when you look at this, there are a lot of applications where it's really general purpose. It's basically a third format of money. And you can use it for a number of different things. You may limit the scope of it depending on how you want to deploy it and so on. But in reality, if and when implemented, you can get it out into the marketplace in a more general purpose manner. So the journey's been, and I don't think we're anywhere near by way, no means complete in terms of implementing any of these. This is going to be a long journey for many central banks and many regions and many geographies. At least 5+ more years in terms of getting this out into the marketplace, and some of them will adopt it in certain ways, and some of them will do it in other more broader implementations and so on. But even I was watching I was flipping through something this morning, and I saw that there were 21 limited operational CBDC implementations, and I actually was very surprised with that number. I didn't even know there were 21. I thought it was like a handful or so on. So I needed to go back and check this number, and I was again surprised. I was like, how do we get to 21? It's a very surprising number. But that sort of shows you sort of how quickly these things are moving into the marketplace, and that's what we expect to see. Motivations. motivations vary quite a bit. When we started with these projects, it started off, I think, in many respects, some of it was exploration, just understanding how it can be adopted in certain type of use cases and scenarios. Some of it was really exploratory stuff. But the motivations for implementation, the ones that are really interested in deploying it for very specific reasons, range from sovereign, strategic, geopolitical reasons, all the way through to solving very specific market needs, for instance, declining use of cash in certain markets, and the need to provide a digital format of money for citizens. All the way through to cross-border and regional sort of implementations that address some very broad needs of the market, where there's a lot of friction across cross-border transactions and things like that, where this is absolutely a technology that can help and drive that level of innovation. And I think that's sort of, and everything ranges in between in terms of motivation. So there's a lot of different reasons. And the one thing I would say is that there's not a single geography, not a single jurisdiction where where things have been identical. All the reasons for doing stuff and all the context, either the geopolitical, the economic context, the market needs, and everything is different everywhere, actually. And we're trying to solve sort of with a solution something that is different in every country, in every jurisdiction. So I think that's something to take into consideration. So this isn't an easy problem to solve, and the problem needs to be well defined as well, I think, in terms of trying to drive the motivations for implementation. So I'll pause there, but yeah, I'm sure we'll have plenty to talk about.
Yeah, so, no, thank you very much. So basically, in case we see these different motivations for introducing CBDCs, we're also going to expect very different design options.
Yes.
But we still hope that all these CBDCs will work together and will.
Well, that's a very good point, and it's also one where there's a high degree of a market need for a level of interoperability between all these different systems, because there's no single solution. I think, because you look at it, well, how would you implement it? Some of them are account-based or specific technology implementations, or some of them are digital bearer instrument or token-based, for lack of a better description. I'm sure we'll correct ourselves on the language in a short while. And there are different solutions in the marketplace that solve these problems. Some of the jurisdictions are implementing their own. Other ones are taking products and developing them, and they're not gonna fit well together. The challenge will be around how do you make these interoperable, I think, at the end of the day. And projects like mBridge and other type of projects that have been in the marketplace, we've worked on, myself and Ousmène have worked on Vince in the room as well. I've worked on projects where we've looked at how to address the level of interoperability, both technical, logical, and then, I guess at the end of the day, making sure that transactions sort of work with one another, and you have that level of interoperability between different implementations. You need to have that, of course.
Mm-hmm. So my take is from your answer why we need CBDCs. There are different motivations, but not a clear, strong one.
Well, it depends on the motivations
everyone.
At the end of the day. So it's exactly why do we need them? I wouldn't say, in the absence of having any understanding of the context, I'd say it's a solution looking for a problem. But in reality, there are a number of problems in the marketplace, and we see the problems in front of us. That's why I sort of look at the cross-border dimension as really the biggest one. In anything I've learned in the last 10 years and behind this, retail is interesting, but it is very specific to the geography, solving very specific needs in the marketplace. And it's not for everybody everywhere. I mean, we all have a plethora of payment options, and does CBDC change our lives on a day-to-day basis? Probably not so much, I think. Mm-hmm. And I think from a retail point of view, does it affect somebody in a market where perhaps they may not have access to banking system services and things like that? Perhaps, so inclusion could be a good reason on a retail side. Is there a declining use of cash, and does the central bank want to offer sort of a digital means of payment for its citizenry and residents? Yeah, again, so why do we need it? In that context, there may be some specific niche areas where there is a need for it, and that addresses a problem. But I think that the ones where there's the biggest pain points is really where there's a high degree of friction between countries that are either neighboring or international trading partners, where making payments is actually painful, and getting access to sort of those kind of services is hard for merchants and commercial entities, and where this could be a very big enabler for facilitating cross-border trade and flows.
So the biggest use case basically is wholesale and cross-border in your view.
Security settlement is also a big area, although that you have to build the digital asset market as well, but in order to complement that. But those are the sort of major areas where we see that, but yes.
Okay, thank you very much. Then I would like to give the word to our next panelist, Bernhard Haslhofer, who is an outstanding expert on cryptocurrencies. He's a co-founder of a crypto asset company, a court-certified expert in IT and crypto asset forensics, and a faculty member of the Complexity Science Hub here in Vienna. I would like to ask you still also the question why we need CBDCs, because if I'm worried about privacy, I can use some form of cryptocurrencies. There are ones that are really offering a high degree of privacy, others not, but I have a wide choice of crypto assets that I could use. For other digital means of payment, we have private sector banking money, and also in cross-border payments, we have private sector solutions like PayPal that have, I think, 300 million accounts worldwide. It works, so why do we need CBDCs? And what could we learn from the crypto market when looking at design options for CBDC implementation to make it work and to make it more useful for users?
Yeah, so first of all, thanks for the invitation, and let me try to answer your questions basically backwards, starting from what can we learn from crypto, because this is my field of expertise. This is what I'm doing with my team for 10 years now at the Complexity Science Hub, which is all about studying networks and studying connectivity. And what we're doing there is basically analyzing global money flows, cryptocurrency money flows. So we have a database where we can really see all the transactions that ever occurred, and we see how global money is being shifted around to a very fine-grained detail, actually. I'm also an advisor for the BIS, for instance. They are also interested in understanding global money flows. I'm also advising law enforcement, Interpol, and German prosecutors, for instance, because, you know, not all crypto transactions are legal, as you can imagine. So this is my background, and what we do is we basically build those networks as a basis for doing our scientific studies. And over those 10 years, we really worked on many papers. You find them on our website, answering all sorts of research questions. But when someone asks me, what have you learned throughout this past decade, I always try to summarize them in 3 points. The first point is, if you look at Bitcoin, which is still the most prominent cryptocurrency, the initial promise was to build a system for global payments without intermediaries in a more or less anonymous way. So anonymity was an initial promise. It was basically an intrinsic motivation for building cryptocurrencies like Bitcoin. But what we see now, today, is actually exactly the opposite. We see a system that is completely transparent, so I can see all the transactions. And if you just combine this transaction history with a data set like the Binance database, which the authorities now have access to, you have the most transparent financial system mankind has ever created. So instead of having an anonymous system, you have privacy dystopia. For me, as a scientist studying global money flows, this is excellent because I can write my papers. But just imagine this database goes into the hands of dictators. So we had dictators before. You can do all sorts of harm, and you know that financial data contain a lot of valuable personal information. So I would say this goal of anonymity, not achieved, completely failed. We have a privacy dystopia. That's the summary of this point over 10 years. Then we have the other issue, which is the issue of enabling global payments. And there was always this promise that with blockchain technology we can solve this and we will have a system for global payments. But now we see that no one is actually paying with crypto, except the criminals, because there it makes a lot of sense. But no one is buying services or goods with crypto. And this is for some very good reasons. There's the reason of usability. So if you lose your private key, all your money is gone. This is a major issue for non-tech savvy users. Actually, also for tech savvy users, it's an issue. And you have the main issue, which is scalability. So I, as a technical person, I have a PhD in computer science. For me, it was pretty clear from the very beginning that a blockchain-based system, so this is the technology those cryptocurrencies are built on, it cannot scale, right? It simply cannot work for a large number of transactions. And we see this now, it's simply not practical, it will never scale, it will never work for a global basis. Just to give you some numbers, with cryptocurrency for Bitcoin, you can achieve between 7 and 13 transactions per second. Visa has 2,000 per second, and during Christmas time, 65,000. So we're talking about orders of magnitude. Okay, so the second point is this idea of global payments also failed because it's not used as a means of payment, because it has really severe technical limitations, at least Bitcoin. Then the third point I would like to address is this notion of decentralization, which was actually the core promise of cryptocurrencies from the very beginning, disintermediation. The idea was that we can all run our own nodes and become part of a larger system, and then we don't need banks or central banks anymore. And we really studied crypto asset ecosystems on various technical layers. So we really studied the peer-to-peer network flow. So we listened to the traffic between the nodes that basically represent Bitcoin. And what we found was a huge centralization in certain data centers. So if you turn off the data center, the system has a problem. Then we also studied the level of mining. So there's a paper out about shares of basically the mining participants. And what we have shown is that there was a certain time when one company in China basically controlled the majority of mining. So more than 51%, which is again exactly the opposite of what the system should achieve. In our most recent paper, we studied those new decentralized finance protocols, which basically is built on top of crypto assets, where you can take loans and basically trade with derivatives, and also under the promise that there are no intermediaries, there are no financial intermediaries. We studied this and showed, again, huge centralization. So we see centralization tendencies basically on all layers in cryptocurrencies. And if someone asks me, are crypto assets decentralized? I say, definitely not, and I would speak about de facto centralization. So those are the three takeaways, if I have to summarize 10 years of research in a couple of sentences. Regarding anonymity and transparency, I also would like to emphasize, because this could, maybe we discuss this later in the regard of CDBC. For me as a technical person, it's pretty clear that you cannot achieve anonymity and transparency at the same time. So it's two opposing goals. And just an anecdote, recently I was called by one of the consulting companies who were supposed to implement CDBCs, and they interviewed me, how can we achieve this? And I was like, you cannot cook hot and cold at the same time, right? You have to make a decision what you want. And even then I sometimes hear from business people, just try harder. But you know, there are certain technical limitations. If you have an encrypted channel, you cannot read it. And yeah, so it's really hard, this anonymity topic. Then we have also the topic of sustainability. So just to give you an idea, if I would use Bitcoin as a currency to buy a beer, let's take a very practical example, at a bar, then this process would take 1 hour, because this is the time the transaction basically requires to be confirmed. That means I have to wait 1 hour for a beer, so you probably agree that it will never be accepted in a broader public environment, so people would not like this idea. And at the same time, this single transaction would cause a carbon footprint which is equivalent of me flying to New York and back. So when we're all talking about decarbonization, I'm asking, is this what we want? And why are we doing this? And finally, so for me, I'm a technical person. If you ask me about cryptocurrencies, I find it super interesting. If this is running in a lab to study, it's super interesting. It really has some very innovative aspects. But at the same time, as a technical person, I would say it's a technology that escaped the lab without any safeguards. And now regulators all over the world try to implement those safeguards, basically essentially the same mechanisms we have in the traditional financial system, to basically fix this problem. And if you look at what happened with Binance, probably one of the largest money laundering facilities that has ever existed, it's taking place now. People try to fix the deficits this technology has. And I think, going back to the question, what can we infer for CDBCs? I think for CDBCs, we should make sure that it's not becoming a technology that escapes the lab, because we only have one chance to get it right. And I think it's also very important that we can explain to everyone, not only to technical person or business people, but to everyone on the street what a CDBC is actually supposed to be. So I would like to explain this to my parents, otherwise it will never get accepted, right? If it's ever to be accepted by ordinary citizens, I don't know. So I think this is really important. We have only one chance. And the big issue I have personally with CDBCs, so if you ask me now, so I'm in this field for 10 years, not CDBCs, but crypto, so I know something. And if you ask me how we can implement this, I would say I don't know, because I don't know what it's supposed to be. That's my honest answer.
Thank you very much for this very honest answer. So basically, you are very skeptical about cryptocurrencies, and this implies then that the only lessons that we can learn for CBDC implementation is that we should make sure that they should not escape the lab. Is that right?
Yes.
Didn't they escape already the lab?
This is something you can probably better judge, because you're on the industry side. No, but I'm seeing this a lot. You know, when consulting companies, they approach researchers to answer some of those questions, and I'm always impressed how little knowledge I also see on the other side, to some extent, to be fully honest. Nothing against you coming from a consulting background, but it's amazing to kind of trying to solve unsolvable issues.
I don't want to defend cryptos here, but I think the examples that you picked are in some sense unfair, no? Because Bitcoin is a store of value. It's not, maybe it was meant for transactions, but that's also one of the reasons why it's so high in energy use. There are other alternatives that use proof of stake and these things, have a much lower carbon footprint, also higher throughput. I think Ripple is one example. So you picked a very, one-sided example.
You can always solve those problems. So if I build a centralized system and call it crypto and blockchain, even if it's not the case, I can solve those problems. But then it's something else. This is what I'm saying.
Yeah. I think the main takeaway is that it failed on delivering anonymity, and it's no longer decentralized. So the whole crypto area. So thank you very much. Then I would like to pass the word now to our representative from the central banking world. I'm very glad that Aniko Szombati is here with me. She's the Executive Director and Chief Digital Officer of the National Bank of Hungary, and has been responsible for, it's called the first live retail CBDC pilot in Europe, the Student Safe initiative, where you cooperate also with a private sector company to make that happen. So you are, let's say, very advanced in pushing for CBDCs, but at the same time, I think a full-scale retail electronic forint is not on the horizon. So could you just give us an overview about this project and the design options that you took, and then explain us why you don't want to go full-scale at the moment?
Thank you very much, and thank you for the kind invitation. And I'm very happy that I can share the main decisive points of our journey. But just to start with the fact that in the cafe break, I was transferring Hungarian CBDC to two of these colleagues. So it is actually, in technology terms, a full-scale CBDC, what we already have, first in the European Union. But this is true that this is still a pilot regime, meaning that we don't make such a huge marketing around it. So, as we have heard from our colleagues, if you imagine that you step into the shoes of a central banker, so everyone around you is already experimenting with CBDCs, thinking about when and how to move into this very fancy area. On the one hand, on the other hand, you have only one chance to make it right. So it's quite of a serious decision. And so as a good policymaker, you should consider the motivations. What were those either market failures or serious policy motivations that you would justify for a central bank to step into this road, to implement something completely new, to build a direct relationship with the general public. So what can these motivating factors being present here? And we have heard some. So maybe you should just modernize your payment infrastructure. You should offer some generally accessible accounts that are free, that are distributed to all citizens, and where you are actually providing financial inclusion to those who are not endowed with bank account yet. There is a specific case, especially after COVID, when governments wanted to distribute swift, targeted funds to their citizens, but they couldn't. So Mr. Trump was first about to sign all the paper checks that they were decided to give away to the citizen, but later on he was informed that that would cause a serious health problem for him and would keep him away from politics for months or for years probably. So there is not a channel where all these state subsidies can be distributed effectively and real time right now. The other motivation factors has to be named here, like maintaining monetary sovereignty. Everyone was frightened about Facebook's or Meta's initiative to implement its own payment architecture independent from the governments, and that prompted all central banks to move into this area at the year of 2019. So, but this I would already recognize as some kind of indirect motivating factor. So, which is important for the central bankers, but not for the users, not for the citizen. And the last one is also similar to create a new platform, a platform for innovation, which can be the source of further market innovation. As Mr. Carstens put, build a single ledger, probably on a DLT basis, that can further support all industry-based or finance-based innovation. So, but again, this is something which is not so understandable for everyday citizen. So where should a central banker move when it is so critical and so our central bank decided that we are moving on two fronts. On the one hand, we are constantly investigating these potential motivating factors, but this is a long-term journey. But on the other hand, we decided to identify a specific use case, which is a small-scale one, which is somehow not so serious, where we can start implementing something real, where we can gain access to real customers. And in this way, we identified the primary school year students as our target group in the age of 8 to 14, who already have some kind of individual finances, some pocket money, some savings goals, but most of the times they're neglected by the commercial banks because they don't seem to be profitable at this young age to serve, or they are legally exempted from the possibility to have a bank account. So we identified that we should target these children. We should offer them something gamified, something nice, playful, where they can win with their knowledge, some presents from the central bank. And we started just to make a digital version of a former concept called saving stamps. Maybe it was also popular in Austria. It was popular in Hungary from the 50s to the late 90s. So the stamps were distributed at the headmaster, and during the school year, the children could buy these for small amounts, and at the end of the school year, they could redeem it at a commercial bank with some interest earned. So we created the digital version of this scheme. The children can resolve quizzes in a mobile application in the territory of financial knowledge, sustainability, or digitalization. And in return for correct answers, they are given these very nicely drafted stamps, digital coins, actually, which they can collect, exchange at the end of the collection period, redeem for real vouchers at an e-commerce company. And so this program was launched in September 2020, which was already a CBDC pilot, but this year we implemented real payments so that we are offering actually as an e-money account for the children and of course for the parents, because legally the parents are responsible for the children. So within this mobile app, they all have a digital wallet. It can be topped up by card payment, and you can either collect money, and you can still collect these digital coins, and you can pay with QR code. Using the existing QR code standards, you can pay at more than 20,000 merchants or e-commerce companies present in Hungary. And of course, you can transfer this money to any bank accounts via the instant transfer system. So in this way, our use case is on the one hand to set the stage for digital financial inclusion of the youngsters, actually the future users of CBDC, who are already digital native, who are ready to give us honest feedback on how the mobile application is performing and how appealing its outlook is it, how difficult it is to set up an account, to make the KYC and all this, because we have to compete on the market with all other financial and other providers in keeping their attention. So we achieve this, and on the other hand, we as a central bank learn how to do it, what are the necessary steps, how to provide the demanded level of security, and how to contact actually the vendors, how to manage such a process, and first and foremost, how to resolve all complaints and how to manage a system which is 7/24 and which is the first one, or I would say the second, because apart from the homepage of the central bank, this is the first system which is 7/24 available for all the users. So we are learning and building capacity for the second stage when the real motivation is identified, so that to shorten time to market at that point.
Mm-hmm. So thank you very much. So I've heard at least two motivations. One was financial inclusion. The other one was the threat by Facebook and other and Libra and other private monies that could take over then monetary authority.
So I haven't said that we were motivated by this factor. It is just a general approach. Okay. So we were motivated to have something operational so that we can learn and that we can expand. So in the next phase, we plan to implement offline payment into the scheme because it is relevant for these youngsters not having an unlimited internet access on their mobile phone, and we are having further plans as well, because we do believe that a successful CBDC can only be created in partnership with the merchants, so that you have to have a broad range of payment possibilities, because this will generate you adoption.
So I would like to follow up with a question on interoperability. So especially that you're from Hungary, and in Europe we're likely to see maybe in the next 5 years the digital euro. So how would it work then if you send me e-forint to my wallet, where I have then probably, or will I have different digital currencies from different European countries, and what can I do then with them? How can I exchange them for the digital euro? Because now if someone transfers money to my banking account, we have automatically this FX, foreign exchange transaction, and now it's separated, so it's basically money transfer, and then at another stage, I think I as the user have to find a platform, maybe a private platform or a BIS platform or some platform where I can then exchange the forint for euro again. Is that right, or how is it going to work?
So actually, what I can tell you is how our scheme is working. How the digital euro is working is under discussion right now in the council working groups. Actually, in my case, so it's still unclear how I can possess digital euro. So most probably I would be a visitor when coming to Vienna, Austria, and have a special regime. And most probably I will have a serious limitation to convert my digital or commercial bank-based forint to digital euro. Okay. So,
was your phone?
Any bird alert, or so that I would echo here John's statements that every country will develop the CBDCs for a specific reason, to resolve a specific problem. And in this way, how much interoperable they would be, it's not so straightforward. But anyway, I would suppose that you would need a digital forint only if you are in Hungary. So in that case, you are entering our market, and since we are considering targeted solutions and not generally applicable payment scheme, as we have an instant payment system fully operational for 3 years, and this is also obligatory for all commercial banks, meaning that everyone who has a bank account can transfer money in 2 seconds to any other citizen. So in this way, we don't see the need for having a generally applicable digital forint. Where we see some space is probably creating a new platform for innovation, and of course to serve that 13% of our adult population who doesn't have a bank account, but they would need a specific approach.
Okay, thank you very much. So last but not least, I would like to give the word to Ousmène Mandeng, who has a very diverse background. He has worked for institutions like the IMF, has experience in the private banking sector, has also worked on consulting, and is now a senior advisor with Accenture's global blockchain technology. He has also strong ties to Akademie. He's a visiting fellow of the LSE and is also a member of the Reinventing Bretton Woods initiative. So far we did not talk about the economic implications. We did not talk about monetary policy. We did just have a look at the details of implementation, design options, and so I would like to ask you what are the, in your view, what are the potential disruptions CBDCs can lead to for the financial landscape, thinking about the banking sector, and also what are the implications for conducting monetary policy? So we could have new tools domestically, like just give you a keyword, negative interest rates, for example, or as we've just talked about before, using it as a form of helicopter money for fiscal transfers, like in the United States. Or, and now last question then is on the international dimension. So some countries might be very interested in using it to some sorts of having more control on their capital controls.
Okay, very good.
I hope you're happy with that.
Thank you, Martin, and thank you very much to the organizers for being here. Look, I'd like to take a step back because I'm not sure we've actually really said what CBDC is about, and I think that is important sort of to appreciate what we are doing. So today, central banks issue 2 formats of money: banknotes and what we call reserves, scriptural money, book entry money. Okay. The idea with CBDC is to create a 3rd format of money. It's a digital token that typically resides on a new financial market infrastructure, which is the blockchain. Now, the blockchain offers us a completely new architecture on how to transfer value. While in today's system, we are dealing with completely isolated financial institutions, there is no interoperability. The only way they can communicate with one another is through secure messages, typically SWIFT messages. The blockchain is the idea that we have a dispersed system, a network of nodes, where the nodes collectively validate the transactions that we are performing. So it's a radically different approach to how we transfer value. The interest in CBDC is precisely to take advantage of these new features and functionalities that afford us to do payments very differently from the way we do them today. That is the interest. It is not about substituting existing processes. It is really about new processes. And it's not also to address existing problems we know of, but very much to think about future problems and future payment needs that may arise in the not too distant in the future. So I think that's very. So it's about complementarity. Okay. And for central banks, the idea, and central banks, have assumed this role of being a driver, of blockchain-based payment instruments, which is maybe for central banks a little bit of an odd situation. The banking system and the asset management industry, they're only catching up now with these developments. But central banks, I think, should take the view that we clearly see the emergence of new interest, of new so-called token-based instruments. These could be securities that are tokenized, etc., and that will live on this blockchain. These instruments will need a safe settlement medium, and central banks should not be biased when providing central bank money to just the cash and the book entry infrastructure we have today. To ensure there is equitable access to central bank money for eligible parties, Central bank just needs to take the view that, very pragmatic view, we need to serve alternative financial market infrastructures. And if those require a native instrument that lives on a blockchain, then we should deliver that instrument. So I think that's the discussion, really. Yeah. There is the discussion about the digital euro. This is a retail payment instrument. I think that is slightly different because it is about allowing citizens to have access to a digital form of central bank money, which we do not today. Again, it's the banknote that we can use. The utility of which can be called into question. A lot of attention is on wholesale, so it's on interbank settlement, where these new functionalities are most likely to be most useful. Think about the foreign exchange market. John mentioned security settlement, etc. Okay, so now when it comes to so Martin, the questions you asked on monetary policy. Per se, there should be no impact on monetary policy. It's just a different format of money, right? So CBDC will be introduced or will be issued by an exchange of reserves for CBDC, right? So it's simply a substitution of central bank liabilities to serve, again, a different financial market infrastructure. So per se, this must not have an impact on monetary policy. In fact, monetary policy transmission is most likely to remain for a long time, will be conducted through the large value payment system, which is our, in Europe, Target 2 or FedWire, whatever. And there's no reason necessarily to change that. What we need to ensure is that money market integrity is being preserved so that we have fungibility between reserves and CBDC, so that funds can flow. We do not create fragmentation and liquidity. Funds can flow seamlessly between CBDC and reserves, and to ensure that the effectiveness of monetary policy transmission will be maintained. Okay. So therefore, per se, I don't think there will be an impact on monetary policy. You mentioned, and I think you did it with a mind of negative interest rates and so on. Negative interest rates for the retail, so where digital euro, for example, serves the retail, so as a substitute of cash, indeed, if we were to impose interest rates, that would be a new channel for monetary policy transmission. Are we really going to go there? John and I, we worked on the e-krona, for example, in Sweden. With the ECB, it's the same. Central banks are reluctant to sort of think about, imposing a direct monetary policy, right? We are basically, central banks prefer indirect instruments. You see, now we're talking about direct instruments. And therefore, I think it's very unlikely that central banks will go that route. But that would be a new form of conducting monetary policy, but it would be a very radical one, you see. In wholesale, it doesn't really matter because there should be, again, fungibility between reserves. To the extent that reserves are remunerated, CBDC, when held by banks, should also be remunerated. So that wouldn't be an issue. Now, there is one monetary policy potential impact. Is if there is a very high propensity to hold CBDC, so suddenly we see a lot of CBDC in circulation, then yes, central banks may have to make adjustments. This is a debate we have with regard to the digital euro. Again, in the retail context, the ECB is discussing the idea of having ceilings on the amount of digital euros that can be held by the general public. I think it's the wrong debate. I think, central banks suddenly are starting to micromanage monetary aggregates. This is not what the monetary policy framework of the ECB is about. We have an inflation target. If we have too much CBDC or digital euros in circulation and it causes some financial instability, well then the central bank will have to intervene like it does with all sorts of other sort of adverse monetary shocks. So that I think is the financial market impact. Commercial banks are very, very, many commercial banks in every discussion I have, and I have many, they don't like the idea of CBDC. I think in particular, though, with regard to retail, right? They see it as a competition to bank deposits. The idea is a very simple one. If citizens can hold central bank money in a digital format, why would they want to hold a bank deposit? And then there is the risk that we see a structural migration out of bank deposits into CBDC. Okay, so that's a concern for banks. Okay, now historically, it's the flip side of the development we have seen to date. Cash is disappearing. Cash is being substituted by bank deposits. So if now we have central bank money again coming to the fore, it would mean a reverse of a process that we have observed over the last 2 decades. Okay, but fair enough. I think this problem is exaggerated. The safety argument is one where there's very little evidence. We do not see migration, not even in times of distress, from small to big banks or from private banks to government-owned banks. If there was a motive of holding money because it's safer, well, then, in Germany, for example, we have the Sparkassen, which are basically public sector institutions, then everyone would have a Sparkassen account if safety were a concern. So I think that problem is exaggerated, and I think banks are struggling to make this a good argument at all. Helicopter money, well, I think that's a very radical way of monetary policy. I don't think it has anything to do with ECB. Yeah, we can do it today if we wanted to, right? Would it be more practical if we were to? Yeah, but I think that is outside the normal sort of parameters of monetary policy. Allow me just to say, I stop. The debate we have and the skepticism we have about CBDC, is not new. When paper currencies were introduced in the 19th century, we had exactly the same debate. In German, we use the word Zettelwirtschaft. Zettelwirtschaft means a state of disorder, where Zettel refers to the paper money that was introduced because it was associated with chaos and disorder. So there was huge skepticism when paper money was introduced because everyone thought only coins are the real thing and we shouldn't have paper money, right? And today we have a similar debate with CBDC. I think it's the wrong debate. I hope we are open to the idea that we should extend the functionality. It is about equipping our financial system with new possibilities to conduct payments. I think it's to strengthen our system in that regard, make it more competitive vis-a-vis private instruments. But in particular, I think have a spirit that this is about innovation as well. This is about doing things differently, bringing in new actors, and possibly addressing new use cases. So that I think for me, I hope for central banks will be very much at the center of their sort of aims. It's about really the key theme. I don't mean to repeat myself, but it is about diversification, and complementarity. And the innovation is not digital money. Most monies are digital. It is the blockchain as a completely new financial market infrastructure, and the token as a bearer instrument, which has property very, very, very different from the account-based monies we have today.
So you said diversification of different forms of money. So what's then the place for cash? Is there still a place for cash in your world? As an alternative, if central banks at some point would actually try to settle negative interest rates in?
Look, I think cash is a matter of choice, right? We have countries like Sweden where cash has completely disappeared. I think what is interesting about it is that it does show that we don't need central bank money in retail transactions, okay? So that I think is important. Cash is very expensive. If you want to maintain a cash infrastructure, it'll cost us a lot of money. There will eventually become a point where maintaining that infrastructure is simply too costly. It would be economically completely rational to maintaining that infrastructure. For me, cash is a very special thing, right? It's the haptic, it's a peer-to-peer, instant settlement. I mean, these features is what we are trying to replicate in the digital space. So there's a lot about cash that I like, but it's also a relic, right? It's an old thing that it doesn't seem to be adapted to the new digital world. So look, my prediction is cash will disappear. It's just a matter of convenience. Do we need to replace it? I mean, most of you probably pay already with your debit card, credit card, Google Pay, Apple Pay. You wouldn't even know the difference if you were to pay with a digital euro or with, Apple Pay. And it doesn't matter, really. It doesn't matter. It's just the back end that's different. So I think cash will stay for a while. There is for my taste, a bit too ideological debate about cash. There is the privacy debate, which I think is also the wrong debate. If we have problems with privacy as citizens, then we need to address this concern to Parliament. And if we need more privacy laws, then Parliament should fix that. It's not the duty of the ECB to provide us privacy when we're conducting payments. So I think these two debates, should be completely separated, and I think that would make for a better debate.
Mm-hmm.
Actually, as a central banker, I would like to assure everyone, especially in Central Europe, that central banks will provide cash as long as there is a need for that. And it's actually a strong brand of central banks up until now. And just to reflect on the recent developments at the e-krona. So there was a parliamentary investigation of what kind of backup system can be relevant when some natural disaster happens and the existing payment rails will be damaged. And instead of concluding that they need to set up a completely new, very resilient digital payment infrastructure, they concluded that maybe the acceptance of cash should be enforced at main commercial places like pharmacies and groceries, so that people could maintain their access to the goods and basic services until the time the payment rails are healed.
Thank you. So I think Sweden is one of the examples where we see that actually a central bank turns to be more reluctant on issuing CBDCs, because maybe they have already this cashless society, they have already a payment infrastructure in Sweden that works quite well. They have private sector solutions, which we don't have in Europe, because we don't have a harmonized payment infrastructure, and that might be then the motivation for the ECB and the European Commission to actually introduce the digital euro, that we have one that can we draw on one harmonized infrastructure, which is independent of technical solutions that come from outside of Europe. Is that what, John, you were nodding your head?
I was going to comment on the what you just mentioned about sort of Sweden and the usage of cash in that case. I mean, the example, they've been studying the e-krona, the implementation of the e-krona for a number of years now. And but the challenge, I guess, with reverting back to cash is that you still have to then distribute this to everybody, or everybody has to have a certain amount of cash in order to be able to continue transacting in the case of a digital failure, something going wrong, some emergency or scenario or crisis or whatever. And that happened a short while ago, actually, in Sweden. It was, I was mentioning this before to some of the panelists, but at the end, a grocery chain had gone offline. The payment system for the grocery chain had gone offline for a number of days. And it was a national grocery chain, so it was all over the place in terms of the country, small towns, villages, and big cities, and so on. And people just didn't have cash. They couldn't make any payments, and the store was full of goods. People couldn't pay. Then what do you do? I mean, you can't take digital payments. You have groceries that people want to eat, and then this goes on for multiple days. So then there would be a rush to go to the bank, some bank, and withdraw cash. When if there's such a limitation on cash, then what do you do in that scenario? So you then have to go back to a paper-based format. It's like you're solving the problem with, okay, a traditional mechanism. That's fine, but how do you distribute this more effectively throughout mostly digital nation, because it's everything is quite digital in terms of payments. So it's an effective backup mechanism. However, you're solving the problem with a legacy sort of solution. And I think what they were looking at when they were looking at how to solve this, how to address times of national, disasters, emergencies, or what have you, was to look at a digital payment rail that was state-owned or state sort of managed. And obviously, this is critical national infrastructure for any government to have that. So another way to solve the problem, but maybe not the best one.
Thank you. Ousmène, I wanted to ask one last question about relating this topic to international monetary, not theory, but systems. So basically, you said that one reason is innovation, why we need CBDCs. And especially if you talk about money, we have some sort of first mover advantages because it depends on networks. So how many people actually use already the money, then the more people that use money, the more likely I also will use money and will adopt money. So how do you see this? And especially if you think about, let's say, China having already the foot in the door, in the digital door, could that be one of the currencies that will emerge as a, let's say, global digital dominant currency, like the in parallel to the US, or what's your view on that?
Okay. So, indeed, many countries look at CBDC for strategic reasons. In fact, it is the EU, actually, that brought us this debate. When the EU published the report about the digital euro in 2020, it said a digital euro will likely make the euro more attractive as a currency. It will be used more in international transaction and increase the strategic autonomy of the European Union, right? So it is the EU, actually, that brought us this debate, or brought the debate to the fore. Many countries, indeed, are looking at CBDC. Could it make their currencies more attractive, lead to a reordering of preferences when using currencies because of the new functionalities and new ways to provide access? It could make their currencies that currently do not play a big role to play a bigger role. So, you know, the fact is, most of you, of course, will know, big economies would like their currencies to play a big role. We have a lot of very big economies, Brazil, India, China, for example, Mexico, whose currencies play no role in international transactions, and that has been a frustration for quite some time, and I think CBDC has brought them sort of a new possible approach to sort of, you know, allow their currencies to play a more prominent role. Will it lead to something where suddenly the Chinese renminbi will replace the dollar, that sort of debate? I doubt it. I think it's a lot about diversification, though, right? We have a well-recognized problem that, unfortunately, our international payment system, which is how currencies interact with one another, how international liquidity is being managed, is dominated by a very narrow set of currencies, in particular the US dollar, right? The US, as you know, is the currency of the United States. It is to serve US policy interests and not those of the rest of the world. That is a problem that Bernhard will know very well, of course, has long been associated with the so-called Triffin dilemma. Right? Triffin at the time proposed sort of two solutions. One is an international currency, and one is to have many currencies, so we depend less on individual ones. So, international currencies, I think it's fantastic in theory, but extremely difficult to do in practice. And therefore, I don't think it's formally, the SDR is to play that role, but it never, so far it hasn't happened. Right? But many currencies to play a role, I think, is something. And CBDC, indeed, I'm working on a project called mBridge with the BIS Innovation Hub. The foundation of this project is that we have an outright exchange of CBDC, principle for principle, between residents and non-residents. It's a completely new architecture, the foundation of which we laid with Project Jura between Banque de France and the Swiss National Bank. And now we have 4 central banks doing this. We had already a pilot. The project will go to what we call a minimum viable product next year, where we have real transactions. We already had real transactions, but at a bigger scale. And I think that's where we are going with CBDC. And the hope is this is about using local currency. So you have UAE commercial banks and Hong Kong commercial banks exchanging value, settling international payments using their local currencies. So dirham against Hong Kong dollar, etc. Right? That is probably the biggest innovation to use local currencies. We are using CBDC because it gives us certain properties to allow this to be done in a very controlled fashion. And so for me, that is where the biggest interest is of using CBDC. It's to diversify the system, allow smaller currencies to play a bigger role. So I find this one of the most promising avenues going forward and addressing many of these very, very long-standing problems we've had in the system for quite some time.
Mm-hmm. So thank you very much. I just wanted to open the floor for questions. Thank you. Please here. You, gentlemen, here, in the third row.
That would
Yeah.
be me.
Yeah.
I wasn't sure I understood the program with the children. But tell me if I understood it correctly. The central bank is going to issue the capacity of children to purchase goods, and the central bank will then have the information of the purchasing of the children. Is that correct? And that information will then tie them in. They'll probably continue doing that as they become adults, and the central bank will then have an enormous library of information of the buying habits of the population. Is that correct?
So actually, this is not any objective for the moment. So we have a couple of thousands of users, and so in this regard, it is an account-based system. So we do have the information, but the ledger and the identity management are separated.
But that's a technical thing that could easily be changed. Isn't that correct? You could join them. So that information we've discovered from Facebook and Google is of enormous both political and economic value. When that becomes valuable, what are the checks and what are the preventive aspects to prevent the state from using that information to gain privacy information, to gain political information on the public?
So actually, the CBDC, as we have heard, an alternative digital way of payment. It is not anything special. So just if the government wants to collect payment information, then they can do it as currently going on, for example, in Hungary, via the tax authority. So all the cashiers are online connected to the tax authority, and all the payments with all the details, what are you buying in any Hungarian shop, goes directly to the tax authority already. So you don't need a CBDC for that. Yes.
State watches all of the commercial transactions of the population?
I say the tax authority is watching this, which is a state authority in the end.
Only the state has the authority to tax. So it would be the state. So you're telling me that in Hungary, all financial transactions are monitored by the state?
All payments transactions go to the tax authority immediately.
Wow. I'm shocked.
Okay.
Maybe after this shock, we move on to the next question. Franz Nauschig, please.
My question is payment system. In the long run, payments will be dominated by the data companies, because payments data are the most valuable data. And there is a study by the Fed that if you provide a CBDC, either you have a public monopoly or you have a private monopoly. And in my view, it's better to have a public monopoly of a CBDC than to have Apple or some other private data monopoly using your payments data.
Who wants to answer? Ousmène, please.
CBDC will be issued by the central bank, so it will, nothing changes. It's like today, right? Now, who is running the infrastructure? Indeed, is it, today the Target 2 is operated by the central banks and owned by the central banks. In the future, could there be an infrastructure that is run not by the central banks, but some diverse sort of, and that indeed is quite provocative. But let's think about the internet, right? The internet is exactly like that, right? There's a variety of different actors, big data centers run by US companies, right? But load balancers, all content providers, all sorts of things, right? It's a network that we use for the transmission of the most intimate information. It's not public owned. It's not even publicly controlled, you see. So with that mindset, maybe we will be open to consider the idea that a CBDC could also be circulating on a public chain. Now, most CBDC projects today use private blockchains, so permissioned blockchains, because of the concerns that you mentioned, you see. But I think in the future, I can see CBDC also circulating on public chains.
Okay, next question, Ewald Nowotny, please.
Thank you. I think one has to distinguish between and it has been done in this discussion, between blockchain on the one hand and CBDCs on the other hand. Blockchain is something central banks already use. For instance, also the Austrian central bank in connection with transactions with the banking side, or the Swiss central bank in connections with the banks. CBDC is something, this is in the retail sector. This is, of course, a much different world. And here we do have systems of payment. And in fact, they are working. So there is no real demand for any other systems. For various reasons, central banks will enter this CBDC world. And they have now the difficult task to convince the public that we should do something nobody really wants. And in fact, as far as I see, there are only two arguments that are of some value. The first, of course, is CBDCs are safer because if you have to deal with a bank, it is not as safe as if you have to deal with a central bank. Which, on the other hand, means that this is why the intention is, of course, to limit the use of CBDCs, because otherwise, in the case of crisis, there would be a bank run and you would get into massive stability problems. The other point is a bit more political point. We do have well-functioning payment systems in Europe, but they are all foreign-owned, especially US-owned. And there is, of course, an idea that this might create some political problems. And we have seen, of course, for instance, with SWIFT, that SWIFT may be used as a weapon in monetary affairs. So this might be a relevant point, although I don't think it is very important. First, if you would engage, that there should be such a kind of a monetary war between the US and Europe, I think then we would have different problems, like just the matter of monetary of payment systems. And second, of course, it is a strong argument for creating a European commercial system for this. And banks are trying to do this for quite a long time. They don't do it so much because this is very costly. And at the end of the day, the point is that central banks are willing, nobody is forcing them, that they are willing to get into substantial costs to create such a system of central bank digital currencies, which means de facto it is state-funded, because if they have high costs, they can send less money to the government. So therefore, it is building up this kind of system. At the end of the day, at least from my point of view, the only reason that I really can see are political reasons, and they are rather shaky.
Thank you. Who wants to say something on response?
If I may comment on the blockchain topic, because it's coming up several times, and I've been on so many discussions and so many panels where this came up, and I would like to be completely clear about this topic. So for several years, I'm now being told that blockchain is the technology for the logistics sector and for whatever stuff. And I never understood why. The problem is I have a technical background, and no one could me explain why you need this technology for that purpose. I completely understand why you have it for Bitcoin. This is what I completely understand. But I never understood why you would need it in the logistics sector, why you need it in the retail sector. Mm-hmm. And I think this is already pretty clear in the private sector. So there are many people from the logistics community here, and I think they will all agree, Maersk, the best example, complete failure, this project. And now this discussion, so in the public sector, people have now understood that you most likely won't need a blockchain to solve a problem. And there is only one place left where they're still discussing this, and it's now CBDCs. So this makes me a bit sorry, I'm talking against your argument, thinking...
I'm not concerned.
Do you won't, most likely you won't need a blockchain, because you're talking about central bank digital currency. There's the term central already in the word. It's not called decentralized central bank cryptocurrency. and you have central authorities, you have a closed community. And most likely, according to all technical principles, and you can talk to any computer scientist about this, you won't need it.
Yeah.
So let me
Just to make this very clear from a scientific perspective.
Yes.
So just a comment, I think, on that, because I think it's a very, very important point that's being raised. And you don't necessarily need a blockchain to implement a CBDC. You can do it, but it is not necessarily sort of a hard and fast requirement in order to do that. It depends on who needs to see the data that is being transmitted around and who needs to validate this information and so on. In a central bank digital currency, it's a central bank that issues it, and basically they're the ones that's vouching for the currency that they're issuing at the end. They're standing behind it, they're backing it, and so on. So there's a distinction between sort of whether you need a blockchain, whether you need a distributed ledger, whether you need a token-based cryptographic secure mechanism, and there have been a number of implementations around that as well. So different type of implementations around CBDC specifically and rolling them out. So I think it depends on what you're trying to solve for, I think, in terms of the solution and the problem that you're trying to solve for. So, but we should be careful to use the language correctly, because I think there's a lot of confusion around, is a blockchain, is it DLT, is it sort of cryptographically secure keys that are being moved around and so on, specifically for the CBDC topic. But I think also, just to maybe comment a little bit, I mean, to answer your question, but to comment a little bit about sort of what are the use cases for this. And I think it's very important to discuss this very openly, because if you take a look at the European context, and obviously lived in Europe and so on, and I don't know whether from a retail perspective there is a strong case for a CBDC. I actually personally don't believe that there's a strong case for it. It does depend where you are in Europe, north to south, east to west. It depends on sort of the need of the local market and so on. However, if you take a look at the broad usage of CBDC across a number of different areas, both from the consumer-oriented retail perspective through to wholesale payments for securities, where there is actually a very strong case for using central bank money for doing security settlement, through to cross-border applications where you can actually apply a different set of solutions or solution to address a set of very, very well-known problems. What you're solving for is the counterparty risk side of it, the elimination of the counterparty risk, where you're saying, I don't need to trust a commercial bank that's sitting on this side of the transaction. I'm actually trusting the entire Euro system that's backing this thing up, that's actually issuing this. And that's a very strong and different statement than sort of the way that it's being done today. And I know there are a lot of checks and balances and guarantees and insurance and risk management that goes around that, but that comes at a cost and at a price that is that could be easily sort of addressed through implementation of a CBDC. And I think this is where we see a lot of applications of it, and mostly on the wholesale, mostly on the cross-border side, where the counterparty risk is a very big one, and people need to manage that in an effective way. And CBDC happens to be a good solution for doing that.
Mm-hmm. So thank you very much. We have time for 2 more questions.
Martin, can I just one point of what Mr. Novotny said on the foreign-owned. The European Payment Initiative, we've had many, right, to create a European scheme, and we failed. Now, I think we should have one as Europe, but we don't need a digital euro for that, you see. So I think here we also should distinguish between the instrument and then, the scheme that we are lacking. And I think the priority emphasis should be on the scheme, not necessarily on the instrument.
Okay, thank you. So here in the first row, please.
Thank you very much. If we go back to the topic of de-risking the transition and the new globalization, is it true that the Chinese have invested enormously, not only in all kinds of digital systems, but particularly in the digitalization of their own currency, and that, if I read the latest book of Michel Aglietta, La course à la suprématie monétaire mondiale, that they have got an edge, that they are on the process of getting an edge, particularly in the light of the increasing polarization between the United States and, let's say, the global New South. And could the advances they have made in this area facilitate for them the creation of some sort of Asian monetary system, or at least a system of countries that would be politically close to them?
I think the question goes again to Ousmène.
For me? Yes, China invested heavily. It's a front runner when it comes to CBDC blockchain-based applications, undoubtedly. There is the EU one, which is, as John said, in a pilot mode now, expanded pilot. It has built and provides the infrastructure for mBridge, which is the 4 central banks. So undoubtedly, it's trying to do retail and also wholesale for interbank and international payments. China has indeed been a key actor here. I think for China again, I think it makes sense. Of course, it's the second biggest economy, and it seems natural that its currency should also play a bigger role. I think it is leveraging what the new infrastructure of blockchain can provide, that conventional, extremely network-dependent systems may take too long to build. So it's looking for a shortcut, right? And I think, look, to be honest, for me, it's part of what I think is a positive movement towards greater diversification of the system. I don't think we should look at this binary, which is either renminbi or dollar, not at all. I think, and I think in that spirit, I have to say I find it very very positive. And I look not at the EU one, but at the renminbi, the CBDC, the wholesale instrument. I find it very positive. The idea that we may have more alternatives when settling trade, but also financial transactions, in local currency, in renminbi, and I think it should be China, the one providing the currencies. Therefore, so yeah, I think it's definitely happening. That's for sure.
So if I may comment on this as well. Actually, I don't know much about the Chinese CDBC and the blockchain-based approach because they don't publish much about it. But what I know is that they managed to build their own payment system. So they have Alipay and WeChat Pay. I mean, it came up from the private sector, but it's the boundaries are not always clear. So they managed to come up with their own payment system. And if we look into this, I think this is really interesting. And we see this also emerging now in India. They built UPI. Which is also a very interesting model. So the state provides a foundational architecture for building an alternative payment system. We see this appearing in Brazil. So there's a lot going on in the emerging markets. I would even say it's the second wave of digitization in finance. The first one was basically what we have now. We have the bank card model. But in the emerging markets, we see the alternative payment systems emerging. And I think this is, in my opinion, actually even more interesting than the whole discussion about CDBC. Sorry to say this on this panel, but
yeah, please. Annika wants to respond.
Yes, just to refer to what has been said already, I think that that central banks have to provide all the alternative payment rails to the citizen, to the industry, to the financial system. And in the end, the final user will decide what they will use. So in this regard, the central bank's advancement has to be parallel to the society's advancement in technology and digitalization and everywhere, so that for example, in the Indian case, it turned out that it has to be run really cheaply. Therefore, the private sector doesn't invest into this, and therefore its security features are not that strong. And finally, the users are only using the public network for cafe or restaurant payments and nothing special. So whatever the central bank imagines about how to proceed, finally the end user, the citizen, and the the enterprises will decide on what to use, and the central bank has to offer a really competitive service or give a very high value proposal to succeed on this road and gain the trust. And so in this way, the central bank's trust maybe have to go hand in hand in the trust in the state, but this is also another debate whether the CBDC should be linked to the self-sovereign identities or so.
So now I wanted to say on this positive note we can close the roundtable, but the last sentence was not very positive. But anyhow, in the interest of time, I would like to close this roundtable now. Lunch is waiting for us. I would like to really thank all of our panelists for the insights and experience that they shared with us today. To give an applause to our panelists. And I'm sure that you're all staying for lunch and that we can have deeper discussions also at the standing lunch. Thank you again.